In today's video, I'm sharing my exact trade plan for the DXY, the euro, the pound, the dollar versus the Swiss franc, and also gold for next week. So be sure to watch the entire video, guys. I've got all of the details in this video. And if you're new here, my name is Justin Bennett, founder of Daily Price Action, Forex trader for the last 17 years. And I'm making videos like this one every single day, so be sure to subscribe to the channel. All right, guys, so DXY, looking at the daily time frame here, this is what we talked about last week here. We've got this channel extending back here toward the lows in September. And right now, the DXY has been in an uptrend ever since this point back here in September. So even though for the most part in 2025, the market has been carving lower highs and lower lows, it is starting to kind of put in a bottom here. And you can see what I've been talking about now for weeks and really even months, how the DXY is trying to carve out a rounded bottom, right? So even though we don't have full confirmation of this, because the last low was this one, if we track this back, the last high is this one. Right? So we haven't quite taken this out yet. We haven't gotten that conviction, that high conviction move above here to really carve out or confirm that a bottom is in place. But the market is trying, right? The market is trying to put in a bottom down here. And, you know, by the way, guys, also, I forgot to mention, I did change my charts back to black on white, as you can see, because I know a lot of people were complaining that they couldn't see the levels as clearly with the darker charts. So hopefully this helps. Let me know in the comments, though, what you think of this new theme. So all in all, guys, we have the market moving in an uptrend. So even though when you look at something like the hourly time frame, right, even though this market has been moving lower with lower highs and lower lows on something like the hourly, this is where a lot of traders get themselves in trouble because they look at this and they think, okay, this market is in a downtrend. And yes, it is in a downtrend since this high back here. However, this is why looking at multiple time frames is also important, because you can see that it's just the opposite on the 4-hour. We've got these higher highs and higher lows. So with the DXY coming into this area down here, let's talk about this here for a moment. And in fact, before we do that, guys, I want to show you something too, and talking about how the DXY is trying to put in a rounded bottom. If you guys have watched these videos, I've mentioned for really over a month now how the price action lately, okay, so this price action down here is mimicking what we saw back here in 2020 and 2021. So this was the bottom that we saw back here in 2021. And so far, the price action is nearly identical. And to prove this, I'm going to open up Discord, which is where all of our VIP members hang out, which I share my trades in there, trade ideas. We've got, 75 channels in here. You can see all this content over here. But anyway, this specific channel is where I share my trade ideas and what I'm looking at in the market for the current week or next week. And you can see here that, and by the way, if you want to join us, check out the link in the description of this video to join us in the VIP. So looking here at this chart, this is what I mean. I took the 2020, 2021 price action and overlaid it on top of the current price action for the DXY. And what you'll notice here is that the white that you see here, this is 2020, 2021. And it is literally a carbon copy of what's been happening so far in 2025. And so while this doesn't mean that the DXY will continue to follow this, which by the way, we're here right now. Okay, this is where we are currently. It doesn't mean that we're guaranteed to continue to follow this. But I think it's really eye-opening to see that it's been literally the exact same pattern all year long, or at least for the past few months. Okay, so, I mean, going all the way back here to March, right, it's been the exact same. And even this right here, this is the biggest difference, right? The fact that this high over here is a little bit offset, but still it's the exact same high, exact same low. And so, anyway, guys, I wanted to share this because I've been saying it now for a long time that this bottom is mimicking the price action from that period. And sure enough, it is exactly. So we'll see if it continues to play out. Obviously, stuff like this is just really for entertainment more than, trying to trade from it. I would not advise trying to trade from a fractal like that. It's more just for entertainment, as are these videos in general. Anyway, guys, this is always just for educational purposes. But looking at the 4-hour time frame, I think for the DXY, guys, what's going to be key for next week is going to be 99.40. So this was the level that we talked about last week. So at the time we were trading up here and we had two sell side inefficiencies down here that I said I would not be at all surprised to see those swept and get the pushback here in the range. That's exactly what we got. However, that November open was always the one that buyers had to break for the US dollar to turn bullish, which clearly we never did, right? This was just a series of lower highs. So for now, in the short term, there is no confirmation that the US dollar is once again bullish. I want to be very clear. Okay, it's going to have to close above this area next week, get a convincing close above here to give us that first higher high and flip the trend, okay? But if we do that, then all of a sudden this channel here, this ascending channel starts to take over and we've got those higher highs and higher lows. Now, another thing too, before we talk about my exact what I would love to see next week, look at the monthly chart, right? This is that channel that we've talked about here going back to 2011. So this is that ascending channel off of the lows. This is that bottom right now that the DXY is essentially mimicking, okay? So we'll see if it plays out the same, but one level to keep an eye on if we do get to push higher over the coming days. So if next week does break out bullishly, this monthly level here at 100.8, this is going to be the one to watch. Notice all these monthly lows. This is also the 50% of this upper wick right through here. We also have all these buy-side inefficiencies that could become targets if we get to push higher. So 100.8, in my opinion, is going to be the one to watch. Now, again, though, what's going to be required from the DXY is getting above 99.4 to really confirm that. Until that time, guys, this is your range going into early next week. Okay, so my ideal scenario for early next week, and it doesn't mean we get it, but I would love to see the DXY come down here and sweep these equal lows. So these right now are equal lows. We have liquidity building up below these clearly. And so I would love to see the DXY move down here early next week, take these out, potentially give us a retest of that composite POC or thereabouts right around 98.9, and then reclaim this range. That could give us the sign for a potential bottom, okay? But really, ultimately, I mean, technically speaking, like I said, this market is going to have to get above 99.4 to really break out toward that November open. Alternatively, we could also test that September high down here. That is still a possibility, but if that happens, to turn bullish, we're going to have to reclaim this area, okay? But again, I would love to see the market come down here, take out these equal highs, and then get a pushback in the range. That is my ideal scenario. It doesn't mean, of course, that it will happen. All right, guys, we spent a lot of time there on the DXY, and for good reason, because it really drives the rest of the market. If you can nail the DXY, you can pretty much trade any major currency pair. All right, so let's move on here and take a look at the EURUSD, which right now, holding above that September low, we obviously have higher highs and higher lows. And this red line up here is the mid-range. This is also a multi-month composite POC. So what that fancy term means is if we go to, let's say, a 4-hour time frame, and you see here, I mean, obviously the euro has been sideways now for months. And so this red line means that this is where the euro has spent the most time trading within this period. And it's also exactly the 50% of this range. So I think that this is going to be significant for the euro. And furthermore, too, if you look at this trend, right? So you look at these lower highs and lower lows. Ever since this time back here in September, all these lower highs and lower lows, right? Since this was our last low, if you track this back to this high, this is what's required for the euro to turn bullish. And I said this before too, but what happens a lot of times, and make no mistake, guys, this market did break out of a trend line. Okay, so if you draw a trend line off of some of these highs, you can see where we did get a breakout so far this week. But what happens a lot of times is traders see this and they think, oh my gosh, we're bullish, we're just going to head, higher. And it could happen, right? But in terms of market structure is always, basically price action is always going to override any technical levels, especially a diagonal like this. And what I mean by that is if you look at the market structure, again, this was our last lower low, right? This is the low within this series. And so if we track this back to the last high, it's this one here at 116.60. This is what has to give out for the euro to turn bullish, not breaking above a trend line like this. Okay, so as long as we're, below this high back here, there is that potential that we could just rotate lower. All right, but at the same time, though, we need that confirmation. Now, what does that confirmation look like? So for me, guys, what this is going to come down to is you can see, first of all, the September low is holding up here as new support on Friday. And what this is going to come down to is this. So we have on the hourly time frame, we have higher highs and higher lows. So what it's going to come down to is we have to see the euro break one of these lows. Now, because the last swing high was from this swing low right here, basically this is your level. Right now, this is your level. Now, if we were to come up here and take this out next week, which I think there's actually a pretty good chance that we do, that's kind of my ideal scenario, similar to the DXY, the inverse of that, because we do have what are essentially equal highs back here. So we never took out this high on this one. So I would love to see the mid-range here tapped next week, early next week, get a sweep of these highs, drop back within the range, something like this to give us that, push back here toward the September low and just trade the range, right? That would be kind of ideal. It doesn't mean that it'll happen, but we will see. That's my ideal scenario, at least intraday. Now, if that happens, then this high up here, okay, this high, you're still looking at these lows. You're still looking at these lows as one that has to be invalidated for this trend to shift, because there is no shift in the market structure until we get below areas like this. Okay, and I think that's really important to understand there, because what happens is a lot of times people start putting, RSI on here, they look at bearish divergences and they try to forecast what's going to happen. And that is not the right way to trade, guys. You want to always react to the market, never try to forecast. And so if we get the drop below here, let's say we take out these highs next week, we drop back down here. Let's just assume, I'm not saying it's going to happen, but let's assume we then break this low. So if that happens, then you're looking at sells or shorts against this area, right? Get that push up here, then you get that move down here towards some of these lows. Okay, but if we just continue to grind higher, take out this high up here, close above here, right? Then you're just looking at same thing, guys, higher highs and higher lows. Okay, and speaking of this, what I just drew there, if you really wanted to get a little bit fancier, which I mean, look, you can do this, you don't have to, but there is technically, and I found it earlier, I'll find it again here. Yeah, there is technically an ascending channel off of these highs and lows. So you'll notice that on the hourly time frame. What's key about this is that we have not seen the euro close below this, okay? So you can see that, first of all, we have these two highs up here. So let's move this to where you guys can see it. All right, so we've got these two highs up here, and then you can see where we have all these lows along this channel support. And again, the market never broke below here. We never got a sustained break below on the hourly. So this could be an early warning sign. Like, let's say if we come up here and tap this area, and then we get a break below here. I mean, that could be an early warning sign, but I still think, guys, that this right here is going to be the one to watch. That September low right around 116.08. Make it simple, call it 116. This is the area down here that the market would have to get below to invalidate this uptrend. And keep in mind too, very much like the DXY, we have an uptrend here on the hourly. However, if you go to the 4-hour, go back a few weeks, you can see that we are still in a downtrend and this has not been invalidated just yet, okay? So let's move on to the pound. This one will be pretty quick, guys, because the pound has been struggling. Looking at the weekly time frame, we talked about this a couple weeks ago, but what you'll notice here is that we did have a weekly bullish pin bar. So we had these two lows here, range lows. We dropped below it on the daily, and we closed back above it on the weekly. So typically candles like this are bullish, right? It shows bullish intent. However, the issue for the pound, and look, we've still got about an hour left in today's session. I'm filming this on Friday, so we could technically close above this high, but the issue here is that we've just spent so much time going sideways. And look, sweeping this wick right here, that's fine. Like typically when you get a long lower wick like this, you do get the market filling, giving you a partial fill of that. The issue I've had with this price action though, is that we really just haven't confirmed this pattern, which, I mean, typically with a pattern like this, or even an engulfing pattern, you need the market giving you a close above here. Now we could still close above here, but it's going to be marginal at this point. I mean, at this point, the pound's not closing up here within the next hour, or at least, barring some kind of miracle here for the pound. So, this is my issue, guys. You look at something like the 4-hour time frame, and it's just been so messy last week that there really just hasn't been a lot to do. Now, with that said, though, I don't want this to sound like I'm bearish, because I'm not, because at the same time, you look at the market structure here, even though it has been very sideways, we are still carving higher highs and higher lows. So, I mean, technically speaking, right, you've still got the market kind of, pushing higher off of this low. So until that changes, there's really nothing to do. There's certainly nothing to short here. And in fact, I think there are better opportunities out there, whether it's the euro, the dollar franc, which we'll talk about, or gold. I just think that those are better opportunities. This one right here, it's just been so sideways and messy, can't get out of its own way. So yeah, I'm just going to stand aside on this, guys. If we were to see, lows like this down here, taken out like the euro, get that change in the shift in market structure, then that could be something different to short against that November open. But as of right now, just way too choppy for me to trade, but we are still carving those higher highs and higher lows. Okay. So I think that if you're going to trade the pound, I think that this is when it really pays to watch the DXY, because this chart here is way cleaner than anything on the pound. Okay. So I think that if you're using this as kind of a barometer for maybe what you should do on the pound, or at least a bias, I think that is the way to go. Let's take a look now at the dollar Swiss franc, which if you guys saw last week's video, this is what we talked about. So at the time, the market had actually broken here. Okay, so we were here and we were looking at this high right back here. And with the fact that we had the market break below this area, okay, meant that we were looking for shorts against this. Now, if I back up here a little bit, I want to back out to the weekly, because what you'll notice here is that this chart has been very range bound going back here to June. Okay, so really clean range here on the weekly, and we had a long upper wick on that week. So this right here meant I was looking for shorts. Now, as far as timing, as far as where I wanted to get in, it became simple because, again, I saw this high back here. I saw how we got a reaction from this high, and then I saw how this failed. So this right here, you talk about market structure, guys. This is what it comes down to, right? You can see that on this way up. Now, this isn't as well defined as some charts. You'll see, a lot of times you'll get something a little bit more pronounced, but for the most part, you can see higher highs and higher lows, right? So you look at these highs here, and this area right here is the one that had to fail, right, to change the structure. Now, we saw the bounce right here. Buyers got trapped. Everybody was buying here. We saw the market punch this level. Guess what happened over here? The people that were buying off of this 80-60 level, right, they got trapped. They panicked. They wanted to get out of break even. So what happened over here? We saw the pair come back up, and everybody who bought over here was liquidating. They were trying to get out of break even, right? What is a liquidation of a buy? It's a sell. And so you had that selling pressure come in here along with big players getting short on this pair, okay? And you had a subsequent move down here toward the mid-range, which this is also what we talked about, 79.87. This right here is the mid-range of this broader range, okay? So mid-range here, key level for this market. You can see we came down here very quickly into this area. So that was a beautiful short. And we even saw the market come down here and test the bottom of this range, okay? Now, fast forward to what we're seeing here on Friday. What does this look similar to? Okay, this looks very similar to this right back here. So we had very aggressive move lower, very aggressive move lower. Now, notice what happened here on the 4 hour, right? We had basically a 2-candle pattern where we got the market starting to invalidate this downtrend. And what we saw right here was the market pull back into what was about the 50% of this pattern. So that brings us to the current price action, right? So as of right now, guys, and the hourly shows this as well, where we talk about market structure, make this really simple. You've got lower highs and lower lows, okay? So what do you need to break this, right? Since this was our last low, again, we tracked this back. This was our last high before that. And this right here is the first time that we are taking out a high within this downtrend. So here's what I'm looking at next week. Very similar to, again, what we got back here on this low, right? So you notice back here as well, same thing, right? Now, this one, we didn't really have a swing high back here, okay? We didn't really have a swing high to get above. However, you can still see that once again, on the 4 hour time frame, it's a very, very similar pattern. We had the market come down. We had this very aggressive move up. The market held the 50%, and then we got the rally. So for next week, guys, and this pattern right here, guys, is, in my opinion, even better than this one back here, because again, we have this swing high right here that we are reclaiming, okay? Now, the challenge though, or the issue that most traders make, or the mistake most traders make, I should say, is that they see this right here and they see this break and they think, okay, this is now my new support. And this is what they do. They draw a level across here and they say, this is my new support level. I'm going to buy from this level. And look, it's not that easy, right? Because what happens is a lot of times you get a market pulling back deeper than you think it might. And there's a reason for that. And that is because of liquidity. It all comes back to liquidity. And you can see that back here, we had a lot of buyers getting into the market that left these sell side inefficiencies, okay? So what I'm looking at next week is I'm looking at this low right here and also this rejection from it, okay? So this right here, if we look at, let's go to a 30-minute time frame, turn on TPO, time price opportunity. This is telling because this is the POC from this session. Okay, so from the high to the low, this is where the market spent the most time. And while it's not exactly at these lows, it's still within the same region. Now, you can also see here that we have this sell side inefficiency down here in the form of an FVG fair value gap. Okay, so you essentially have this range down here. So from this high, from that inefficiency up here toward that POC. So this is basically what I'm looking at for next week, okay? Now, you might be looking at this and thinking that that's a pretty broad range, but here's the thing. If you're targeting areas like this up here, okay, so if you're targeting this here, the mid-range, and you're buying down here, then technically you don't really have to put your stop below here, right? This is just my opinion, guys, never financial advice. I want to remind you that. But you don't have to put your stop loss down here. I think that would be kind of extreme because really if this is going to hold, if this first higher high is going to hold, then we shouldn't really see the market come below this fair value gap, okay? We don't want to see it punching below this area down here. So really you could put your stop, and it depends on what the price action looks like at the time. I'll talk about that in a second. But really your stop could go even below this low right here, okay? So if you're buying here, stop down here, target up here, that's just looking at it probably at least a 3-to-1, if not a 4-to-1, right? So a really nice trade setup if it sets up. Now I'm going to do a little bit better for you guys, because what this is going to come down to, and I'm going to get down to the 15-minute chart here, okay? So when you see the market come into this area, so instead of just, looking to blindly buy here and then see the market drop all the way down here, and then you're panicking, instead, guys, just wait for the price action to come down here. And what it's going to come down to is this, all right? So let me turn this off so that these drawings stay, is let's just assume for a minute that we get the market dropping down here next week, okay? So it drops down here, punches down here into this area, you get a little bounce, and then it goes like this, right? And it just continues to do this. Well, during this entire time, you're not buying, because what you're looking for, okay, and I should have drawn this a little bit better, but what you're looking for is the market to take out one of these highs. So in the same way that you were getting in, right, or at least changing your bias here because of this high, you would do the same thing intraday. Okay, so if we did this over here on the hourly, then what you could do on the 30-minute, 15-minute, whatever it might be, then you're looking at the price action as it comes down here into this area of value, right? And you're looking at the same exact thing. You're looking at the highs and lows. Has the market taken out a previous high, right? If it does something like this, then it hasn't. There's no reason to buy this. Now, if at some point in here you see the market take out a low, right? Test this area and then do something like this, and you get it taken out this high, then guess what? Now you're looking at this area over here, okay? So you are looking at buying that first higher high. So let me draw that out again. Do like this, okay? Come down here, test this area. You get that first higher high. Now you're looking to buy right in this area down here. Okay, so you're doing essentially the same thing on a lower time frame as we did right here to come up with this area. So I hope that makes sense. But instead of just blindly buying down here and hoping for the best, only to see the market drop even lower, and then you're panicking, you're thinking, oh man, I could have gotten a better risk reward. Just watch the lower time frames, guys, and watch for the exact same thing, because price action is fractal with these markets. I mean, you can treat a 15-minute chart just like a daily chart, just like a weekly chart. It's all really the same when you actually boil it down. Okay, the only difference there is really the number of trades that are occurring within each candle, but really the markets are fractal, guys, so you can do that on any time frame, whether it's the hourly, 4-hour, 5-minute, whatever it might be. So looking at gold, let's move on to this, guys. I mean, that's basically just to sum up for $1 Swiss francs. I'm looking at this area down here, but I will be watching the price action at the time to see what it looks like. And if we get that first higher high, that confirmation, I'll be looking to buy this with a stop below that low. So let's look at gold now, guys. XAUUSD. So this one, we talked about this last weekend as well. And the idea there was that we had obviously this big liquidation event back here, right? Buyers got themselves in trouble, and we saw the market move all the way back down here toward this area and just consolidate. Now, during this period, I was looking for the push up here into this area because we did have two sell side or buy side inefficiencies up here that we took out this past week. Okay, and I had those marked on the chart last week. So if you saw those, then you know exactly where those were, and we took those out. Now, at the moment, we are seeing this market pull back, and I want to explain what happened here this past week. So in the VIP group, and this is one of the benefits of being in Discord, is that on this run up, right, what I told members there at the time was that we had this channel that had formed, and I showed this during this period here, and I said we could get some relief here following this retest of these highs, right? So we were still within the channel at this time. Now, what I also said, and I dropped the VIP video on Thursday, which I do that twice a week, guys. VIP members also get 2 weekly videos that you won't find anywhere else. This high up here, this was actually a daily high. So what we saw here was gold fail at this high. So we got the push above here, and then immediately on this right here, this is when you could have started flipping a little bit more bearish. Now, notice on this relief rally, we got gold moving right back there into that daily high. So again, this right here, and I talked about this in the video, but obviously this would have been a great short if you were looking to get short on gold for a push down here into those sell side inefficiencies down there at 40.27 and 40.60. So we got those, and this was an incredibly aggressive move from gold down here to liquidate longs. So this is kind of what I always thought might happen this week, or was likely to happen this week. Following this run up, I mean, you rarely get, even with gold, you rarely get the market just moving like this out of a range. And buyers that got in down here making out unscathed. I mean, typically you don't get that. You typically get the market returning to these areas of inefficiency. Okay, so we have seen gold now take out this level down here. This one is debatable. We haven't quite seen the market come down here. Of course, it could be a little bit higher. It just depends. I'm not going to sit here and say that we're going to sweep this low because we have to take out this inefficiency. It may have already been taken out. It's really just too close to call. But I think that regardless, I think what you've got to be careful of is, first of all, we have this buy side inefficiency up here now. So 41.28, this is a single print up here because of this aggressiveness on the way down. So that could be targeted next week. However, the challenge here now is that this level right here, okay, you see at 41.26, this is actually a multi-day POC. So based on this consolidation, right, this is where gold spent the most time within this consolidation. So you got this level, you have that single print. This is going to be resistance down next week, okay? So I think the challenge now for gold is that the look of this pullback, I mean, it's obviously been very aggressive, right? And even though the market's holding above support here, what I think we could see next week is potentially, okay, let's go to an hourly time frame, potentially a move up here to test this area. And look, we could come down here first, or we could come up here first. I don't know what's going to happen, but I think that this is your range now for next week, okay? So I think if we move up here first into this area, then we could potentially get a pullback from there, look for this high to fail, and then get a move down here toward the low to maybe sweep that low. If it obviously happens, inverse of that, we get the move down here first in this low. This is probably support. We come back up here, tag this level. But regardless, guys, I mean, this is now going to be your new range for next week. So that in and of itself can help you if you are trading, especially on the hourly time frame or lower. So that's what I'll be looking for on gold next week. I mean, I have no issue trading this on the hourly time frame. But it's going to come down to, like I said, which side we test first. Do we test this low down here, take out this low, or do we test this first next week? And that's really going to determine what we get from there. But really, again, resistance up here, support down here. I think that's what it comes down to. And this is going to be critical. This is going to be a critical level now for gold to where buyers are going to have to get above this in order to target higher levels, right? So I think that there's no sense in targeting all-time highs for gold as long as we're below areas like this around 41.40, okay? So I'm not bearish on gold, certainly not. I think that we could see the market rally from here. We still have two buy-side inefficiencies up here, single prints. From this push lower, it doesn't mean that we have to come up here and tag these, but they are there, okay? But regardless, we need that confirmation from the market structure, and so far we do not have that, okay? But for now, this is my range, guys. 41.40, this general area, down toward 41.30, and then we've got support coming in down there in that 40.40, 40.30 area. All right, guys, that's it for today's video. I hope it helped. Have a great weekend, and if you want my help with your trading, including seeing my trades live, also getting access to those real-time chats and market updates in Discord, as well as the full course, check out that link in the description of this video. I hope you guys have a wonderful weekend. I will talk to you again on Monday.